All right. So again, let me welcome each and every one of you to Asian Bankers Association's webinar on accelerating impact beyond digitalization of financial inclusion. My name is Dan Lumain from Rizal MicroBank Inc., a thrift bank of RCBC. It's my pleasure to be your host and moderator for this afternoon session. I'm sure most of you know that financial inclusion is an objective that multiple organizations have been striving for. It's an advocacy that's been shown to drive and complement economic growth in Asia, but it's also worth recognizing that financial inclusion poses a worthwhile opportunity for banks to pursue. And over the next 60 minutes, we will be hearing industry experts talk about how banks can modernize its approach and ensure its viability within the business of financial inclusion. So I encourage every one of you to pay attention over the next 60 minutes. And if you do have any questions, feel free to let us know via the chat box below. I know we have a large audience this afternoon, and we will try to entertain as many questions as possible. With this said, let me now turn over the virtual floor to our two distinguished speakers to talk about their perspectives on financial inclusion and how Temenos can contribute to addressing this. Please welcome Temenos Financial Inclusion Product Director, Lynn Peterson, and Temenos Business Development Director for Payments, Ajay Pundir. Lynn, AJ, floor is yours.
Thank you very much, Daniel. Hello, everybody. Just give me a moment to share my screen with you. Today, we're going to look at some of the challenges that have been identified by the Asia Development Bank, the World Bank, and many other such organizations when it comes to accelerating financial inclusion globally. So what is financial inclusion? What do the and underbank need? Firstly, remittances. We all need to be able to process payments. We need to send money home to our families when they need to pay perhaps for school fees. We then also know, let me just explain that AJ will share his thoughts on payments and how Temenos helps later in this session. Secondly, the and underbank people need somewhere safe to keep their money. Under the mattress is no longer an option. It is simply not safe. And we know that by mobilizing money or by mobilizing savings, it will drive a robust economy. People will be able to save for a rainy day, take insurance, provide education, and also make provision for pension. And then finally, lending. This is the core business to our sector, but perhaps the lowest priority if the other two are not fulfilled. When I read the Asia Development Bank report on the challenges that are faced in expanding financial inclusion to help end poverty and inequality, I found 2 points that really resonate. The first is finance. Firstly, access. Everybody needs access. And secondly, the financial institutions need to develop the financial markets. The ADB states that everyone should have access. And only the reason why they need to develop financial markets is because the days of donor funding is running to an end. We know it's harder and harder for the dollar to stretch further. Then the second was digital technology. By providing the infrastructure, ensuring adoption, and by providing a legal and regulatory framework, then only will digital technology succeed. It is clear that the impact of the ADB in development in Asia is significant, with 75% of adults already having a bank account or using mobile money. 95% are covered by mobile network and 88% have access to electricity. This is significant when we compare this with peers in other parts of the world. At Temenos, we believe that in order to accelerate the impact of digitalization, attention needs to be paid to ensure that access is provided to all. This includes applications that are supported on the technologies that are available to the end users, be that smartphones or function phones that require USSD, the GSM protocol used in sending text messages. Vast numbers of women do not have smartphones, as there is a belief that women will leave the communities or the households if they do. Men need to be educated that this is not and will not be the case. Financial institutions have a responsibility to ensure that personal information is private and secure. Customers are to be educated in what their personal data is and their rights are before they consent to their data being stored and used. We see a global adoption of artificial intelligence, referred to as AI. Your solution that you select has to be trustworthy. And when AI decisions are used in, say, loan decisioning, it has to use algorithms that are appropriate for your environment. Using an algorithm to decide a loan for a male in Europe hardly fits the reality of a female SMSE borrower in Asia. So who is Temenos? We are the world's leading banking software provider, headquartered in Geneva, that's Switzerland, with 56 offices globally. 16 of these offices are in APAC alone. Our company is 30 years old and listed on the Swiss Stock Exchange. We believe that Temenos is everybody's banking platform, regardless of the sector and the business type. We celebrate 3,000 clients in 161 countries, and our partners are key to our business, especially in financial inclusion, because our partners have local resources, understand the local environment, the local challenges, the local languages, and also the local unique requirements. So as I've mentioned, we deliver the same software to any bank anywhere in the world. We provide a single code and configuration base. No matter where we deploy, whether it is on-premise or on the cloud, whether that is Temenos' public cloud or the bank's private cloud, we are type agnostic, no matter what type of financial institution. We are segment agnostic. That means from financial inclusion on the one end of the scale right up to wealth on the other end of the scale, everybody can use the Temenos technology. We size agnostic, no matter the size of the bank, and then also location agnostic. I have already told you that we have 56 offices and we have clients in 161 countries. When we look at, we believe that we power a world of banking that creates opportunities for everyone. When we look at financial inclusion, just a couple of introductory facts. We have today 337 clients in 53 countries that use our solution. The financial inclusion sector and product configuration has been strategic within Temenos since 2000. We are focused on financial inclusion in that we provide to the specific requirements. So group lending, managing guarantors, flat interest loans, the CGAP reports, those are part of our DNA. Our clients range from startup NGOs right up to banks that today hold deposit-taking licenses, and we have accounts from nothing, so startups, right up to just over 7 million accounts are supported on our software. Then we have in excess of 220 trained and skilled partner consultants that deliver our projects. Temenos invests on average 20% of its annual income in research and development. Remember I said to you we have a single code base? That investment benefits our financial inclusion clients as well. So whatever the peers, so the banks that work in other sectors, whatever they require from Temenos to develop, that automatically becomes available to our clients in the financial inclusion space as well. So anything that the banks offer as diverse products can be available to you as well. So this is where we are. We see the Temenos footprint, and then we have clients installed as well. So there are very few countries in the world where you will not find Temenos being used. So how does Temenos assist in addressing the challenges? As mentioned, we have a solution that is configured for financial inclusion based on the flagship core banking system called Temenos Transact. Our implementations are done very quickly because the product is pre-configured in a period of up to 5 months. That will include data migration and training. And this is an upgradable, mature, and trusted solution. What is our value proposition that we bring to you? So your consumers, whether they are custom consumers, sorry, let me start again. So your customers, whether they are consumers, so individuals or groups, can all benefit from a wide range of products and services. And we built our product on 3 pillars. A user experience, because if your users are satisfied in their exposure to the system, that translates into good customer service. And the customer satisfaction becomes the means by which you will recruit and retain further customers, because word of mouth will be your biggest marketing campaign. And finally, efficiency. We ensure that no data input needs to be repeated. Everything happens once, and that includes all of your bulk processing. So bulk loan approvals, bulk disbursements, bulk repayments, and so on. This system is very easily integrated with third-party solutions. We use APIs, XML messaging, or files to communicate with third-party solutions. And examples would be payments, your local payments providers, mobile wallets, authentication, because we're speaking about digitization. So that use of your banking system by external users need to be authenticated and protected. And then, of course, any others such as regulatory reporting and so on. The system can be implemented, hosted, and application management provided by local partners, or, of course, as I said, by Temenos Software as a Service company. So in summary, Temenos shares in the understanding of the challenge faced in this sector. Our goals are to provide access to financial services to all, grow the local economy sustainably and affordably, and to benefit from everybody being aligned with the global ambitions of the institutions such as the Asia Banking Association, the European Development Bank, the Department for International Development in the UK, the World Bank, and many others. We do this by the solutions that we provide to our clients in order to serve their communities. I will now hand over to Ajay, who will tell you more about remittances. Thank you for listening.
Now, let me share my screen. Everything that needs to be said about financial inclusion has been said already, and I think Lynn put it very well. I want to take another perspective. I want to look at it as a business. You know, financial inclusion always comes along with a bit of empathy, which is very important. But at the end of the day, for a fintech, for a bank, for any sort of financial institution, it's a business. And business needs 3 key things. One is understanding of the target audience and target customer. And it's very relevant what the customer wants. And the second is, what kind of propositions would you offer to these customers? And the third one is, how do you execute it? And what I want to try and do is put these 3 perspectives together and try and sort of relay a message of what's happening in this world right now and how Temenos can really help, and how payments make all of this real. I believe payments is the only fact. Payments actually is the execution of any sort of transaction within the financial inclusion space. So Lynn has said a few of these points already, but from a consumer's perspective, yes, payments and storing of value is very relevant, but actually it starts from identity. A consumer in Asia actually is struggling at that level. So identification of a consumer, a digital representation of a consumer is very relevant. As that moves on, then are opportunities, right? Fine, I have an identity. How do I get opportunities? And I know it's not a tech problem. It's, you know, mostly a government problem, but it's all connected. Third is, all right, I've got an opportunity. I've started to make money. How do I store my money? And value is what I'm using the word value rather than money, because the way money is identified is changing. It's changing from a fiat currency to maybe something which is not regulated, maybe which is represented in some other form. So storing of value is very essential, of course, but in a varied form. The next one is, all right, I've got money and I have a way of storing value. How do I use this value? That's where instruments come along, and digital wallets, whether they're for fiat, whether they're for any other sort of value, whether they're for unregulated digital currencies or regulated digital currencies, have proven to be the catalyst in these markets, and they would continue doing so. And then comes, all right, I've got money in my wallet or value in my wallet. How do I exchange it? And an infrastructure to acquire these transactions from very type of, storage of value, very type of instruments, is where this becomes very, very, very important. And a combination of tech providers like Temenos, Nagarro, and the government sort of comes together. And then it's where the business is. The highest margin business is around the credit, whether it's retail credit or business and commercial financing, within domestic borders or across. And this becomes one of the bigger opportunities. Now, this is the consumer perspective, and it's a very important one. But what happens is that it's all very linked to how the governments push it. And the first two, identity and opportunities, is really where the government comes along. And it's so essential, and it's happening already. I mean, over the last 5 years, the number of economies that have taken millions and millions of people out of poverty has grown crazy. India, Vietnam, Thailand. All of these countries have grown tremendously over the last couple of years, and digitization and digital economies is a big part of that. But also is economic realities, slowdowns, geopolitical tensions, skills that these people have and groups have, employment opportunities, inflation. All of this come together, but digital identity and opportunities is still an area where governments have to do more, and they are. But it still is an unbreakable part of the puzzle. But as we move further along the line, we start to look at a very different picture than, say, 5 years ago, and the picture would look very different in the next 5 years, right? So store of value accounts is very important. You have to have an account with a financial institution, and that's where it starts, but you have to have an identity to do that. So identity, then you have an account, physical or virtual. But what we're seeing is the kind of store of value is also changing. Digital currencies are moving in form of a hedge against inflation and economic realities, right? So it's a technology problem, and it's also a business opportunity for financial institutions and fintechs. The second is instruments, right? So we see wallets as an instrument, and I know people could argue that a wallet is not an instrument, but we genuinely believe wallet is the most used instrument in Asia right now. Whether it's driven as a crypto wallet, whether it's driven as a stable coin wallet, I know still not that big of an adoption. But along with accounts, this seems to be one of the biggest pushes and adoption that's happening across the stream. But then exchange of value and the infrastructure, underlying infrastructure, and this is where local players and sort of clearinghouses and fintechs and governments, geopolitical combinations and blocks come along. So ASEAN has recently launched an instant payment scheme that will connect across all the 10 ASEAN countries, right? So remittance becomes very relevant. Getting availability of funds for these groups is very relevant. But then all of this translates into one single thing: a payment, a transaction, right? So transaction processing becomes very, very important. And as loads and loads of people move out of poverty and get into a different segment, the transaction volume will increase, and the need for better processing and optimizing of revenue for banks and fintechs would increase, right? And what we also see is, as economic growth jumps into the reality, there's going to be a shift. I am personally calling it a shift, but there's going to be a shift in the consumer segment. Today, I look at customer segments starting with inclusion as a segment, then retail, then corporate, then business, then commercial, then corporate, then investment. So as you look at these segments, if you cater to an inclusion customer segment today, most likely they will move into a retail business or commercial segment tomorrow. So building those relationships, building those values for them today is absolutely important, because that's going to be your growth segment in the next 5 years as a bank, as a fintech, right? So if you look at it from a strategic perspective as catering to long-term growth, this is the most untapped potential for a bank in ASEAN today. And catering to them, even at low margins, is very relevant. And the shift is going to keep moving and increasing, and banks and fintechs have to look at it. And this is where I believe Temenos comes along. Every aspect that you see that translates into a transaction, a payment, we can help optimize that revenue for a bank and a fintech, right? Whoever you are as a financial institution, whichever country you operate in, including a central bank, to be very frank, a commercial bank, a fintech, we can help you follow the shift. And we can help you in technology, of course, and Lynn has done it, very eloquently presented what we do and how relevant we are and what we have experienced over the last 30 years. But what we can also help you in building for the long term. And payments are relevant for building for the long term, right? And this is what we can help you with. Thank you very much.
At this point, I'd also like to introduce another panelist who will be joining our discussion. Please welcome on the virtual floor, Surya Vedula, Vice President for Delivery at Nagarro. Hi, Surya, and welcome to the panel. Let me begin our Q&A portion with you, Surya, since you were able to really hear from you a couple of minutes ago. Now, Lynn and Ajay were able to share their insights on financial inclusion and how Temenos has been able to build a platform that can deliver a very equitable approach to getting more clients while still maintaining the viability for banking institutions. I'd like to hear from you. What's your perspective on this concept of financial inclusion, and what do you think should be a key priority for banks in terms of addressing financial inclusion in their businesses?
Thank you so much, Dan, and it's good to be speaking to all of you and to be here. Financial inclusion, much like what Ajay referred to, the transition of economic segments from maybe inclusion to the higher segments where there is a need for other financial products and services, creates the need to address that segment today so that the banks and financial services companies have customers for the future. So you're in many ways preparing an existing customer segment and helping them through these transitions, while obviously ensuring the viability of your own businesses. So having this forward-looking thinking to segments of the future, and also enabling better lives for all the people in the society, I think is a very important aspect that our companies should consider, and are, by the way, actually planning at this point in time.
Thank you for that. And I think you share the same sentiments as Ajay when we say that the customers are already available in the market. It's just a matter of how we approach them and how we bring them into our business and ensure that they move with us as we grow our own organizations. So I'd like to go back to Ajay's point earlier, and you did give us a picture of how we should be able to focus on that transition. Based from your experience, what has been the more prominent issues in making these customers move into the commercial banking sector and basically move up the ladder in terms of financial access and usage?
Well, it really depends on the country, but believe it or not, general awareness was a big issue as well. So you as a consumer, for example, living in a city, might see X number of things that you want to sort of aspire to. A lot of these groups do not see that. It's not an aware. They're not even aware of these. And as things have changed over the last couple of years, just sheer education and awareness have given an aspiration, right? And I see that as a big issue. But then as they move up, then it's identity, and then it's how do I get an account, or how do I get to a bank, and it's difficult to do that, right? So even in some cases, say for example, agriculture sector, they're quite strong businesses in many countries, but they do not have a bank account, they do not have insurance, and so on and so forth. So awareness, I think education is a big aspect of it, like that tells them, yes, there's a better path. And as then they get into that sort of official economy, then it's all starts with banking and insurance and credit, and that's where then it can move into a shift, as I'm calling it, a business banker or customer or a commercial, and so on and so forth. And as banks cater to their corporate customers because they know they would move into investment banking eventually, and that's a bigger business. I think this is a similar concept, So yeah, I hope that
All right.
answers your question. Yeah.
Yes, thank you very much for sharing that, AJ. I think what my insight from that is basically we just need to really be prepared as an organization to make sure that we have the readily available products and services that our customers require. As soon as they become more inspired, more motivated, and become they prepared with that.
Sorry,
that
just
kind
to
of context.
Yeah. Apologies for interrupting you, but just to add, and I was hearing this interview by one of the most prominent bankers, and he said something about India. He said the government over the last 5 years has moved about 400 million people out of poverty. 400 million people. They're all going to need accounts. They're all going to need commercial banking. They all want to do businesses. So economic growth is very, very closely linked to financial inclusion. But it's an opportunity for fintechs and banks and financial institutions to tap into that, right? So just a few numbers.
Yeah, I think most of the bankers in this call would definitely agree that there's a business requirement that we can provide for these customers. But I'd like to shift the floor to Lynn and focusing on the same insight of really preparing the banks to offer these kinds of products and services to the unbanked and underserved markets. Do you share the same sentiments with AJ in terms of making sure that we have a wide spectrum of products readily available for these clients? And what do you think is the best approach for banks in terms of addressing the resistance coming from the market? Because as we all know, even if technology has been present over the past couple of years, there are still some sort of market segments that fear the use of technology, that fear the shift towards these products and services offered by traditional and digital banks. We'd love to hear more of your insights, Lynn, on that.
Thanks very much, Daniel. So yes, I completely share in Ajay's view of the transformation that takes place when people have access to financial services. That awareness is created by the microfinance institutions going into the communities and developing awareness and developing skills, and people mature right up to the route that Ajay has very elegantly described to us. So fear for financial technology, yes, I completely understand it, because many of our clients, when we first onboarded them, came from using Excel as their banking system, and suddenly there's this daunting core banking system used by very large banks in the world. We've made that process easier by pre-configuring the system in such a way that the things that our partners, Nagarro, for example, will do on every implementation, we've already put that in the product. So it's configured, the implementation is very quick, and it is very bespoke to the services and the products that the microfinance institutions need to provide to their customers, their communities. Now, a good friend used to refer to the Temenos technology as a big castle, but you only pay for the keys to the rooms that you need access to. So if you don't do wealth today, although you're getting the same underlying core banking system, you will only get keys to those rooms in the castle that you need to serve your work. Your business. But as your business grows and your customers become more sophisticated in their needs or their requirements from your banking system, you simply unlock more doors. And because we start small, we start very easily with a quick implementation, very honed into what you need today, to expose more parts of the software is then a natural progression for the users as well, because they've got that foundation.
Thank you for that, Lynn. Let me just point three things that you did mention. Number one is making it easier for our customers, for them to have that perspective that this is something that I can actually use, right? This is something that has been created specifically for my context. The other thing is making sure that banks try to be selective at first on what products or product features they can make of, or at least they can introduce to the market, and to quickly implement these enhancements so that it can be easily offered to the market. But of course, with quick implementation also comes certain risks, right? Certain issues that may come with the experience of clients. And I do have a question coming from one of the attendees that is focused on the issue with respect to clearing, and in general, any disruptions that fintechs and traditional banks may be facing in terms of financial inclusion. So I'd like to pose this question to all of the panelists. So maybe we can begin with Surya. The specific question is, we all know that settlement and clearing happens on the same day, but there are certain challenges in terms of availability of funds. So one of our attendees is asking, what are the disruptors and how are fintech companies or even traditional banks address these challenges with respect to using technology for financial inclusion? Surya?
So settlement is an important aspect, of course, right? And as we look at the solutions that Temenos provides us, a lot of these things come pre-configured and preset as Lynn is talking about it. So I would look at this as more of a change management problem, change management for the bankers who are offering these solutions to their customers, and also a change management problem for the people and the financial inclusion segment that you're working with. And this segment oftentimes is not as educated as one would expect, believes in decisions made by a group. So your friend does something, a number of you come together, right? So these aspects become more important in handling the group. So managing the change on that side and enabling and re-educating the people to expect what settlements are, what do they mean, and the relationship managers and the branches of these new banks, existing banks, have to build that credibility and enable this transition to happen. I think it's not really a technology problem. That is a solved thing, especially with tools like Temenos.
Okay, thank you for that, Surya. Ajay, do you share the same sentiments?
Actually, well, so I think I saw the question, it says a lot, it's more focused on availability of fund. And so looking at it from a merchant's perspective, and this is someone who's probably, a very micro business in an Asian country. And the way this person acquires transactions or payments could be cards or could be cash. But if it's traditional bank transfers, it could take a day or two. But that's where the governments come in. That's what I was saying. The governments provide underlying infrastructure, and instant payments as a technology, as an infrastructure, is very relevant. But what it allows is for merchants and consumers to have availability of funds within 10 seconds. So what banks have to do is, and fintechs have to do, is tap into this infrastructure, right? And that's where players like Temenos come in. So governments do their job by building infrastructure, which is good for the economy and hence moving everyone in the right direction. Banks use that infrastructure to offer good services, and Temenos and Nagarro, and we offer technology that can help enable banks to actually offer these services, right? Now, this is a very dependent conversation on the governments and the infrastructure. Banks alone for them, it's very difficult to change that. If, for example, in certain country, instant payment doesn't exist, it's a difficult job for just the banks to do without, unless they take a huge amount of risk.
All right. Thank you for that, pointing at the need for tapping into the infrastructure readily available, or at least made available by the government. How about for you, Lynn? Any insights on that question as well?
Yeah, I would just add on to what Ajay has said, and also Surya, is the fact that Temenos is operating at banks in 161 countries. So we've done this before. why don't you reuse the experience that we already have on the table when nobody has to do this from scratch?
Right. May I just add one more line? So
Go ahead.
again, going back to the wallet, and maybe Ajay has a thought on it. Also, so assuming an instant payment infrastructure across multiple institutions does not exist, wallets within the same institution and related groups and merchant groups can be brought together to still enable this kind of transactions to happen relatively quickly within the infrastructure one institution. Also, so you could still trade amongst each other using the Temenos infrastructure that is available to you within that ecosystem.
Wonderful. So it's a very interesting to hear the combination of three insights, right? Focusing on re-educating the market, utilizing the infrastructure made available by the national government, and using your own experience as a company and the case studies of other institutions who have probably done this in the past. And as Surya mentioned, building that ecosystem of banks and non-bank institutions to work together in making that seamless payment experience possible for the unbanked and underserved markets. Now, just zeroing in on the technology that we can actually utilize in making this happen, I'd like to focus on what Lynn mentioned about reutilizing the experience of the other countries or the other companies who have already done this in the past. And Lynn, I'd like to ask you, in terms of these experiences in more than 170 countries, what do you think are what's the most prominent, most important criterion that banks should bear in mind in choosing their solutions provider should they decide to pursue financial inclusion as a business opportunity?
Oh, yes, it's a very deep question that you're asking there, because it's a big decision, and a wrong decision can have such far-reaching implications. Money is hard to come by, and we have to make sure that we get absolute value. So I would say the first thing is look for a vendor who has a strong balance sheet, so strong financial backing. So you know that that vendor will be there for the long run. Look for a vendor who understands your business, not somebody who has all of the buzzwords, because there are many people that know how to speak the language, but have no credibility in the sense that they cannot provide you with the real cases. So speak to the users. Speak to the users of the system, and Temenos is completely open. Any one of our clients will be very happy to entertain a conversation about Temenos, about the technology, and will expose both the good and the not so good. So do make sure that you get to speak to the users of the system. And then, of course, look at how your vendor's ambitions align with your own.
Summarize what Lynn mentioned. It's all about ensuring that your vendor has a strong financial background. They understand what you want to happen. They are making their users available to you so that you can converse with them. And they're also very ambitious to work with you in making certain enhancements happen. And Ajay, I'd like to focus on you as well in that spectrum of Lynn's insights. I really want to ask you, what does Temenos bring into the table specifically for financial institutions? How does Temenos meet the criteria that was mentioned by Lynn a couple of minutes ago?
Beyond all the very important points that Lynn mentioned, from a business perspective, the way banks or anyone who's in banking, whether it's a bank or a fintech, there are three major pillars, all right? I call it the Holy Trinity. You do accounts, you do payments, and you do lending. That's it, right? Now, anyone who does these three would find revenue somewhere, right? Because sometimes payments margin would be less, sometimes taking deposits is not as lucrative, and there are restrictions on how you use those deposits as a bank or as a fintech. But then eventually you get into lending of various sorts, and that's where you make money, right? So peripheral services beyond account and payments is where you make money. You look at a vendor who can do all of that on one single platform, that's a big differentiation, right? So you as a bank, your vision is, all right, I'm going to start making payments first. Well, I have a bunch of accounts and I'm going to start making payments with those customers. That's great in domestic and international. You take the platform, you start doing it. But you know what? Then eventually I would offer my capability. So creating an account, making a payment, domestic or international, to a fintech. I would outsource my tech and distribute my services through other players, right? Um, you can do that with the same platform. So APIs and really strong API at the granular level, every data element, every capability you can offer to fintechs. And we've seen that small banks, medium-sized bank, for them, APIs have actually an integration with fintech ecosystem has proven to be a great equalizer. Yeah, we've seen banks go from being sort of really unrecognizable small entities to global players in the fintech space and the payment space, right? Then you start offering accounts, but then eventually, as the shift happens, as your existing 100 million customers want to become businesses, some of them, maybe 10% of them, then you've got about, I don't know, another 10,000 businesses who want to do lending with you, right? Another 50,000 people who want to do BNPL with you. You can do all of that on the same platform. So that's the strength of Temenos infrastructure. One platform that allows you to tap into every business model and tap into it well and scale and grow from there. And that's really what we do best.
Thank you for sharing that. So Temenos has been recognized globally to provide that single platform and even basically allow other systems to be well integrated into that system should businesses decide to utilize other fintech providers in their business. So I'd like to focus on Surya now. With that answer from AJ and in terms of, envisioning a wide array of platforms that can be integrated into a single core banking system. What do you think are the enhancements in the future, or how do you think the IT solutions can help banks expand their business and ensure that they are ready, resilient enough to carry on the risks associated with growing their technological platforms?
I think going back a little bit what Ajay said, one is understanding what is the journey that the bank itself wants to take. So oftentimes in the financial inclusion space, a financial company starts off with the ambition to service just this segment, right? And as their segment continues to change, the bank also continues to transform and apply for various kinds of licenses over a period of time and extends additional products, cards, lending, savings, and then various other aspects, right? So having a clarity on where you want to go and in what time frame are you talking about something, rather than being extremely reactive. You've suddenly seen a surge in growth and now you're trying to redo everything. And then you make the short-term decisions of outsourcing various aspects. And then later on, you tend to not be able to have the collective data to mine as you wanted it, having the uniform identifier for a customer across multiple products, and then you're struggling at that point in time, trying to do warehouses and other aspects. Better insights into your customers may be lost if you've outsourced some systems to various vendors or parties. And oftentimes we think we can get all the data back over a period of time, right? But the fact of collecting your data back from the outsourced service providers back into your own infrastructure is a very cumbersome exercise, including data, history migration, uniform keys to flow across. So having your company's vision, aligning with your technology vision, and taking a little bit of decisions with foresight, although it may mean additional costs upfront. And like Lynn was saying, the ability to pay by module, pay for what you use over the longer run. And we see this often as the charters change. Is how I think banks and financial companies should think about it.
All right. Thank you for that, Surya. And before I just move on to the next topic, I'd like to just end this section of our conversation with this question. One of our attendees is asking, is there a platform where they can access information regarding your case studies? And if you are able to share one or two cases that Temenos has done in the spectrum of instant payments. I pose the question to possibly Lynn or AJ.
Maybe I can take that, Lynn?
Yeah, go ahead.
Yes, thank you.
Again, more than 150 banks use our payment solutions. All right, let's just start with that. And either sometimes with core banking integrated, or again, payments as a revenue generator is a big deal across segments. And the infrastructure allows banks to be completely disconnected from a core banking technology framework and have an independent payments processing orchestration engine, again, optimizing revenue. Right? So a good example is one of the largest fintechs in payment processing fintechs in Australia that connects into 20 banks that eventually connect into probably millions of customers, process instant payments or is starting to process instant payments on our platform. So that's one good example. We also have customers in Hong Kong. We also have 26 customers, well, essentially the entire Vietnamese market running on our platform. And a lot of those use instant payments with us. Similarly, Cambodia and Myanmar, and a lot of these customers here use us for those scenarios. But what is essential is instant payments framework or the concept has a few commonalities across countries. And as a new country launches it, about 60, 70, 80% is very similar. So we as a platform have enough experience, both in terms of technology, in terms of growth, in terms of advising on how to optimize that, going beyond retail to commercial segments. We've done it all, and we bring that to the table.
Great. Thank you for that, Ajay. Just to circle back to one of the questions, is there a platform or is there a website making these case studies readily available in case they want to learn more?
I would have to come back to you, but again, Temenos website has a lot of these examples of how bank payments have sort of collaborated with us to do that.
Wonderful. Thank you. So for everyone's information, feel free to visit their website to learn more about the case studies, the practices and success stories that Temenos has brought to the industry globally. We have a couple of minutes left for our Q&A portion. And again, let me take this time to encourage everyone. If you still have any questions left unanswered, feel free to let us know via the Q&A box, which you'll be seeing at the bottom part of your screen. And speaking of questions coming from the audience, there was a question raised. Lynn, this goes out to you. You did mention allocating a certain portion of your budget towards research and development, and possibly this is a good way to focus or to discuss during the last portion of our Q&A. What do you think are the challenges that may be faced in terms of research and development, in terms of technological innovations within the next 5 years? How do you view the future of financial inclusion and how technology would assist in making financial inclusion a reality for multiple countries across the world?
Thank you very much. That's a very good question. Thank you to the person who has asked it. So, as a former banker myself, and having been with Temenos for 23 years now, my focus, and this is my personal focus, is driven around doing lending responsibly. It's so easy for people to get caught in a debt trap. And for me, the challenge will be to make sure that we as financial institutions providing services to our communities do so responsibly. Ajay referred to buy now, pay later as one of those capabilities that Temenos has brought to market. We provide banking as a service, so you can process other banks' payments through the Temenos platform. But my overriding ambition in ensuring that we continue to operate in a world that is fair to all is to ensure that we do so responsibly. Now, other challenges are coming our way is the fact that we've become an instant society. We all want to push a button and things must happen immediately. And I see that will just accelerate. People are going to want more and want those faster. And yes, there's nothing wrong with that. But we must not forget the women in the rural communities who perhaps have one function phone between them to ensure that children's school fees are paid, or that the husband who's working in the mines husbands are sending money home to help the families. Make sure that we continue to bring them along that journey with us as the world accelerates.
Thank you for that, Lynn. I think that's a topic that's often left unsaid, especially in business conversations where we always talk about how to, revive the investment, how to make sure that we're cost efficient in our approach. Sometimes forgetting the fact that there's a responsibility that comes with the innovations we introduce to the market. So thanks for that, Lynn. And Surya, I'd
Thank
like to
you.
hear your insights on that as well. Uh, of course, there's a lot of things happening across the world, especially in the field of technology, and we can expect the same level of change. In fact, we can expect things to be different in 5 to 10 years from now. How do we balance that out with what Lynn mentioned of being socially responsible in these innovations, especially from the perspective of a solutions provider and from the perspective of a banker?
So I think technology brings very exciting possibilities, right? And when we look at technology in service of people who are marginalized, whether it's a financial reason for being marginalized, an ability or a disability, technology brings you various solutions. If you extend for a second the financial part aside and look at people who are not able to commute for various reasons, are stuck in the physical spaces, technology is now opening up various virtual spaces for interaction, right? Enabling people to participate in economic activity if the solutions are designed well for a person who's not able to move physically, cannot commute from place to place, or even places and infrastructure could be the reasons why you would not be able to commute and participate in an economic activity. So the creation of these virtual spaces through various providers at this point in time, creation of virtual marketplaces and exchange of fair value can enable governments and other societies also to tap into a larger tax base or enable more economic activity where taxes can be generated and value can be provided back. And when you keep these aspects in mind, platform providers like Temenos play an integral role. And I think the features that will come out of Lynn, her team, and Temenos will continue to enable these things to also happen, whether it is women who are not able to move out of homes, but yet participate. Supply chains are being created over a period of time, shipping access to markets is being improved. So I am very, very optimistic in terms of what can be done with putting all these infrastructures together, including healthcare and others. The possibilities are amazing. And again, it's dual use. Technology is dual use depending on how you look at it. Yeah.
All right. Thank you for that, Surya. And thank you for sharing your optimism. I think majority of us would also share that level of confidence in terms of what the future can bring in terms of, again, financial inclusion and making technology work to its benefit. Now, for AJ, I think one of my last few questions before we end our webinar this afternoon is that, payments has always been a part of our society. Even if we take a look at history, it's always been an integral part of society. And given that long-standing history in terms of payments and the innovations that have happened, what do you think is the future for payments in terms of technology, and how do you think this entire landscape will change over the next 5 to 10 years?
There's this concept I use to sort of gauge the changes. I look at 3 layers: infrastructure, as the governments and non-governments now provide for payments, in general exchange of value, intermediaries who do that. So banks are moving out and fintechs and sort of non-banking are coming in, and then instruments that customers use. So infrastructure, intermediaries, instrument. I feel over the next 5 years or 10 years, all of these layers would have a tremendous amount of change. And governments would probably be playing important roles in higher factors and higher functioning elements of the economy, but a majority of the traditional sort of work that these intermediaries and infrastructure providers were doing would move into, I don't want to use the word, but that's what it looks like. It's going to be democratized to a level. And and that's where I see things moving. So you can expect huge volumes, number one, because everything would be a payment, everything would be a data. And data and payments together would change the business landscape. And as the business landscape changes, and as the needs change, banks and fintechs and any non-banking provider would have to have infrastructure that cater to a varied set of business models, but also a varied set of technology aspects. Yeah, money is not going to be what it looks like today. So you might want to be ready for processing encrypted currencies, and processing regulated, unregulated encrypted currencies, and processing micro payments, and a huge scale of it, and across very interconnected global ecosystem. Even with all the wars and everything, you still see lights in various segments of and especially in ASEAN. I mean, China and India is trying to participate, India and ASEAN, and within ASEAN, right? So it's going to be a very interconnected Asian market, but heavy on technology and heavy on speed of change of this technology. And banks and fintech have to partner with someone who can help them grow and sort of scale and sort of adopt these changes very, very, very quickly. Thank you.
Thank you for that. And basically, I think majority of us would also be very excited to see what could possibly happen and how we could be a part of that journey by being the first one to introduce those changes to our respective markets. So again, on behalf of everybody here and on behalf of the Asian Bankers Association, Lynn, Ajay, Surya, thank you very much for the time that you've taken out of your busy schedules to be with us this afternoon. And to every single attendee that we have, thank you again for participating. Of course, there are more sessions that will come from the Asian Bankers Association, so stay tuned for those announcements. For now, we bid you goodbye. Thank you very much once again. My name is Dan Lumain from Rizal MicroBank, and I wish you all a pleasant afternoon. Thank you, everyone.
Thank you
very much.
Bye-bye.